Have you ever turned on the news and heard someone say the S&P 500 is up, the Nasdaq is down, and you're thinking, what does that even mean? Today, Franklin and I, we are here to help you understand what the stock market indexes are and how you need to understand the indexes before you start investing, because that is so important. But not only that, family, remembering and understanding that you need someone to walk alongside you to help it make sense for you to understand investing as a whole.
Please like this video and subscribe to our channel. Yeah, as we get into our conversation, there's a Bible scripture that comes to mind. It's in Proverbs chapter 15 and 22, and it says, "Without counsel, purposes are disappointed, but in the multitude of counselors, they are established." Yeah. So it's important not just to have your own opinion or your own perspective, but it's really wise to have multiple perspectives so that you can make informed decisions and especially informed financial decisions, especially along your journey.
I love it.
So as we get started, one of the first questions that we have is, what is a stock market index?
Yes, the stock market index, it is I'll use this. You have S&P 500. So that's one of the indexes, right? But you have your S&P 500. S&P 500 literally has over 500 public traded companies. And that company, it could be Amazon, Costco. I know we got some Costco people out there. It could also be Eli Lilly, which is a healthcare. It could be Meta, which is we got people that love Facebook. But it can be over 500 companies within S&P 500. So you think about this. Think about if you have your child's report card, because I know we have parents out there that have children, right? And you're not just looking at the quiz. You're looking at the entire report card, whether it is social studies, math, you gotta love some math, English, PE, science. Like, you're looking at all of those different subjects to understand why your child got these grades and how they were able to pass. So think about the stock market like that. You have 500 public traded companies that is within this index fund that makes up part of the market, right? And you're looking to see how are they performing within this index as well. So when you hear people say the S&P was up today or the Nasdaq was down today, this is what they're talking about. And so we pay close attention as investors. We really do. We're always talking about, like I asked my husband, I said, hey baby, was the stock market up today or was it down? What was going on? And we're kind of talking through that. But we're also talking through, okay, who moved the market too? So just being able to understand and having that perspective when it comes to S&P 500, known as the indexes.
That was great. I love it, because I started getting a flashback of my report cards. Growing up, not all of them was spectacular.
Right.
But, they were, gave us some information that we needed.
Right. I love it. So, honey, we hear about S&P 500, which is what I went over almost every day. But we also want to understand the importance of the S&P 500, the Nasdaq, and we cannot forget our Dow Jones.
Our favorite. So yes, the S&P 500 is 500 well-established companies in the stock market. And so you have different industries within the S&P 500. If you think about a grocery store, think of the S&P 500 as one grocery store. And within that grocery store, you have the meat section, you have the fruit section, you have the chip section. You have all these different sections that make up the grocery store. Well, the same thing in the S&P 500. You have all these different type of industries that make up the S&P 500, like technology, financials, healthcare, industrials, and on and on. Right. And I know you have a favorite section in the grocery store, and I have a favorite section.
Sweets.
Yeah, sweets, and I like fruit. And so I like sweets too as well. But investors are the same way.
Right.
They have their favorite type of section they like to hang out in the grocery store. Like it could be the technology industry, or it could be the healthcare industry, or it could be in the financial industry. And so that's what the S&P 500 represents, really the total stock market. And transitioning on to the Nasdaq. Now the Nasdaq is a little different. The Nasdaq primarily focuses on technology companies. And so you can see how technology is really driving and moving the market. And so that index really gives you a clear picture of a lot of the innovation in the market, a lot of the transformation that's taking place, the AI. And so the technology is where you will go to follow that index. And then lastly, the Dow Jones. Now the Dow Jones have only 30 stocks in it, but they're like industry leaders. But they're older. Many of the companies are older, more well established. Even the index is one of the oldest and most well established. And I think the reason why it's not one of our favorite indexes is because, they're slow to change. They have a lot of older companies like IBM. They have Verizon. They just booted Verizon recently and replaced them with Google. Google's been around. It's been a market leader for many years. It's like the third or fourth largest company on the stock market, but they're just now getting added to the Dow Jones average. So that goes to show you how slowly they move sometimes. And so, but you might like the Dow Jones. It might work for you, but it really doesn't. It's not our cup of tea.
That was good. That was good. Being able to break all three of them down, but also giving them examples like how they can really see it and on that level too. So that was good. Like I love, like we all love technology. That's why we're looking at Nasdaq daily and we're looking at S&P daily. We rarely look at Dow Jones, but it is one of the oldest index out there. So I love it, baby. That was good.
Thank you.
You're welcome, sweetie.
My next question for you is, if someone is brand new to investing, which index should you pay attention to first?
Not all of them. not all of them just yet. Like we would tell you to focus on the S&P 500, and because the S&P 500, as we said, it makes up over 500 public traded companies, one of the largest companies out there, right? And so as my husband went over, like the healthcare, the banking, the energy companies as well. You have your manufacturers. You got so many different companies out there, but being able to understand and know that all of the investors focus heavily on S&P. We do. We invest in S&P 500, right? And so being able to understand that. So I'll give you an example. We love examples, but I'll give you an example. So my husband and I, in July, we literally come together and talk about the first half of the year. Like we go back and we revisit our vision board. We look at our financial health as well. And so we don't just look at like the electric bill, or we don't just look at like the grocery bill. We look at what income is coming in. For you, it may be your income from your job, your child support, right? What's coming into your household. The other piece is the savings. What savings do we have, right? How much interest we've made, right? That's another passive income. The other piece is our investments. We're looking at that as well. How did our dividends do? The other piece is like your mortgage, your other expenses. So you're looking at that holistically to understand. You're getting a clear picture of where your financial health is. That's the same thing as S&P 500. You're getting a clear picture of all of these different stocks that the S&P 500 has.
Oh, thank you. That's really good. I'm glad how you broke that down. That gave me a little bit, the light bulb went off just like that. And so I'm excited talking about this topic.
I know, because it's good, like to really understand and not be afraid to really talk about it. Not being afraid to break it down so everybody can understand. Baby, so when we first got started, we was like, "Whoa, this market going up and down, up and down, up and down." But we need to break it down for people, because why does these indexes seem to go up and down every single day?
That's a great question. And we have to understand that when investors buy stocks, you know, it drives the prices up. And when investors sell stocks, it drives the prices down. So there's always buying and selling in the market, but it determines who's in control.
Right.
If there's more buyers buying stocks than investors selling stocks, the prices or the indexes go up.
Right.
Now, if there's more investors selling stocks than investors buying stocks, the indexes go down and the prices of the stocks go down. And so just understanding that fundamental in the market can help you understand how to read the indexes. And there's so many different things. And so also other factors are, you know, if there's earnings that comes out, that can have an impact on the market. If the earnings are really good, and you know, the stock price may go up.
Right.
But if the earnings are bad, the stock price may go down.
Yes.
No, that's generally speaking. That's not always true every time, but generally speaking. And there's other factors like geopolitical events. That moves the market. If there's a war, or if there's a financial crisis, that can move the market. Or if there's a change of leadership at a company, you know, or an industry, you know, there could be something going on, and so that could move the market, just depending on which company it is. So that was a really great question, and I'm sure, do you have anything you would like to add to it?
Because I don't know if y'all remember back a while back, like Starbucks, like they changed their CEO, and it impacted, right? And so just thinking about that, like these things that Franklin went over, it can move the market. So I love it, baby.
And vice versa. When Chipotle lost their CEO, it had a real big impact on their performance.
Really did. It really did, baby.
That's really good. And so the next question I have for you, baby, is if we could leave couples with one piece of advice, what would it be?
We would tell you is you're going to hear unfamiliar words. But this is not the time to be afraid of it. This is the time to lean in and learn and grow and know that you don't have to know every single thing. It can be one topic that Franklin has learned and that he's sharing with me, or it can be something that I've learned and that I'm sharing with him. Like we're always growing and learning, but we're doing it together. That's the other piece, is that being able to walk alongside each other and learning how to invest and how to move the Dow is so very important. The other piece is that Franklin and I, we wrote a workbook that's called the Stock Market for Couples. It's really, really a great workbook that can really help you understand. It gives you a step-by-step. Our tips are in there for you. It allows you to reflect. It has questions. It guides you. It gives you different terms around the stock market. But we wish we had that workbook when we started to really understand and break down the stock market. So we pray our video truly, truly blesses you in your financial journey. If you are invested in the stock market now, drop it in the comments. We want to hear from you.
Please like this video, subscribe to our channel so you can see what's coming next.
Your financial journey is better together.